Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news that at the close of business today in New York, the second quarter 2026 earnings season will kick off, with major banks JP Morgan, Bank of America and Wells Fargo leading the pack. They'll be reporting into a market that is jittery over the rebounding crisis in the Middle East. Adding to the confusion, Trump said the US is imposing a 20% toll on all ships passing through the Strait of Hormuz. That will close all traffic except Iranian-linked vessels. Separately, yesterday tech stocks from New York to Shanghai all took a beating. Meanwhile, US Fed Governor Waller spoke today, emphasizing he is watching the inflation signals closely and warning that more hikes may be necessary. He warned about the impact of tariffs, energy prices, and spillovers from demand for the AI build-out. But he is wary of recent history, acknowledging that this evolving situation has different risks and we shouldn't fight the last war on inflation. We are seeing a long-time dove turning hawkish on the need for action on inflation. And that comes as the US federal government posted a much wider deficit than expected, boosted by tariff refunds. Over the past 9 months, that deficit has swelled to $1.36 trillion, on track for another unsustainable record only one Trump could engineer with his dodgy fiscal strategies. In India, CPI inflation rose to 4.4% in June, its highest since December 2024, and slightly more than expected. Food prices rose 5.3%, with tomato prices up almost a third on this year-on-year basis. In China, their climate and weather authorities are warning that there is an elevated chance of more serious storms this year. They've just had their first major one, and they say more than 6 national emergency level storms are expected before the end of their summer. In Australia, we should probably note that the Xero CEO has sold all her own shares in the company, a somewhat startling signal. Meanwhile, OPEC is turning glum. Their July monthly oil market report lowered the 2026 global oil demand growth forecast to 780,000 barrels per day, citing economic instability from the geopolitical conflict. They also see reduced demand in major markets now. The US Treasury 10-year yield is now just on 4.61%, up 5 basis points from yesterday. And the price of gold has fallen to $3,994 an ounce, down $126 from yesterday. Silver is now just on $57.50 an ounce, down $2.50 from yesterday. But oil prices are up $6 at just on $77 a barrel in the US, while the international Brent price is now just over $82 a barrel. Hormuz transits have essentially dried up as the hot conflict explodes again, and Iran declaring the strait closed. There have been just 6 crude tankers and 5 cargo ships exiting over the past 24 hours, and 5 of those are Iran-linked. Only 5 were entering for new loads, all Iran-linked. The Kiwi dollar is little changed from yesterday at just under 57.6 US cents, but against the Aussie, we're up 20 basis points at 83.1 Australian cents. Against the euro, we're unchanged at 50.5 euro cents. That all means our trade-weighted index starts today just on 61.5, which is the same as this time yesterday. And the Bitcoin price starts today at $61,935 and down 3.4% from yesterday. Volatility over the past 24 hours has been modest, however, at just on plus or minus 1.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.